Welcome to our Thursday morning trading session. Just a moment here, I'll get the screen share going. All right, so we just had the markets open up here this morning. Let's take a look at what's going on. So the NQ in a little bit of a tailspin yesterday. This is the Eagle, of course. This is our first in sync trade of the morning, and we do have a chance at a second push on this signal. Now we've been following, oh, that's going to be a little bit too far. We've been following the NQ on this first signal of the morning. We'll see whether or not this one plays out. It seems to have a reasonably high probability of success. All right, well, here we go. So we're looking for the NQ now to take out this support on the low. And what is this? Oh, we're only 3 minutes into the session. This is actually the first one of these first signal trades that I've tried all week, I think. The other ones worked out. Oh, this one's making some progress. All right, we're about to hit the break-even trigger. Actually, that's close enough. I'm going to force the trade to break even. Come on. It's got to be a few orders parked here around the 47, 96, 97 area. Yeah, we can see here on the Geiger counter how the dial, they're starting to load up a little bit. It looks like we had comparable signals on our other tools. Here out of the open, we had a nice macro pullback signal, or actually right on the opening bell, it looks like we had a first micro macro cross. So a nice opportunity here on the hawk to get short. The Falcon had a late filter entry signal. Now you're going to notice that the trend line went out of sync here, but only for a single bar. Now your best late filter entry signals, the trend line does not go out of sync at all. However, if it goes out of sync for a single bar, I'm usually okay with that. All that means is that somewhere through here, the market ticked one tick too high or stayed at a certain price a moment too long, and that ended up changing the trend line color, but only for a single bar. You certainly don't want to see, the trend line change for this duration and then come back and say, oh, well, that was a late filter entry signal. No. No, that's a little bit too long. And here on the Raptor, we've also got a nice cloud crossover signal. So the market trying to get up, the cloud neutralizing a little bit, coming back down. Prices drifting into the cloud pushing price back out, producing a signal, and a nice follow through from that as well. So the Eagle trying very, very hard here to get to our profit target. Oh, come on. They're just hovering here. We're going to print a 4-arrow consolidation in the hawk as well. I'm really debating just grabbing that profit. Uh, Jim's asking, Eric, when you have an opportunity, how do you install the filter on the Eagle? Yesterday I had to rebuild my charts, but I could not recall how to install the Eagle filter. What you want to do, Jim, is go here to your indicator window, and then from there, scroll down to these indicators called IW. You're looking for IWTMATR trail. Double click on that so it shows up in your assortment, and that's it. Just apply it, and voila, you'll have your double indicator. Now here's a little tip for you. Once you've got everything set up the way you like, let's go back to this chart. Save the template. Go save as, give it a name, and that way when you rebuild your chart, it will already have all the presets on it the way you like it. Then, when you close your NinjaTrader, and it prompts you to save your workspace. Of course, you want to save your workspace, but before you do that, save a duplicate workspace. I just label my duplicates number 2, of course. That way, if your file ever corrupts or you do something wrong, you'll have a backup of everything the way you like it. All right, I'm going to roll in my stops here a bit, perhaps go with the bar high-low. Oh, well, I didn't need to worry about that. See, all you need to do is threaten the market a little bit that you're going to start to jam them up. All right, well, fantastic. That's a great way to start the day. And I suspect we could see the market tail off further from here as well. So it might have been a nice trade to put a runner on, but hey, I'm not going to get greedy. Yeah, like Tony says, thank you, Russell. Russell, the DTS owner, who brought that to my attention. He was fond of following the eagle, and he said, "Hey, Eric, have you ever noticed how the first eagle trade of the day really tends to have some pretty good follow through?" No, actually. But yes, thank you. Thank you. Of course, as with all things trading related, it doesn't work all the time, but it works often enough that it's worth following. Sometimes half the battle is just having the nerve to put the trade on, because you'll look at the market and you think it can't possibly go higher or it can't possibly go lower. Well, guess what? It can always go higher, it can always go lower. Okay, let's see what happens now. This is around quarter to the hour, and there was a time where I would not take the trade that occurred about 15 minutes into the session, because it tended to be a little bit of a knuckleball type trade. It didn't have any follow through to it. We'll see here whether that's going to hold true or not. Not that we really had a signal here. I suppose the Raptor was the only one that produced a signal off the soft edge. Certainly not one of our high probability signals, but it does appear as though we are seeing a little bit of a reversal off of that earlier effort. Okay, working a possible trend change here, drifting back into the hard edge. I'm not entirely sure we want to get too crazy with the orders just yet. Okay, so we're into the hard edge, excuse me, here on the Raptor. We'll see whether this translates now into a soft edge buy or whether we're going to get a double pullback signal. Keith is asking, can you use the factory settings on the Raptor for crude and gold? Yes. Yes, those would be fine. The only popular market you really need to adjust for is the E-mini S&P. All right, well, they're falling off here a little bit, so it does appear as though we've got a little bit of a downtrend occurring. Um, Keith says there's news at the top of the hour. Hold on a second here. Let's see what report we're expecting. Manufacturing report out, the PMI, but that's still 5 minutes off. Oh, I don't know about that, Tony. Tony says new way to determine a flat market. If Eric ain't trading, nothing's happening. Oh no. I get caught flat-footed all the time. Look at this. Here is a very nice first micro macro cross. I was looking away, and very good follow through from that. Yeah, definitely we had another opportunity there to get short on this market. It does look as though we are committed to a downtrend today. Now, when the market seems strong this way, you can really hop in anywhere. The problem will be covering your position. Because, like it or not, the best place, let's say we're going to enter way down here, the best place to cover this trade is actually above the high of the morning. That's the best place. And you can see that even trading a $20,000 account with the NASDAQ at 2%, that is not feasible. Now, I'm sure I can dial this up to 3 or 4% and make it work. Yeah, there you go. And I certainly wouldn't scalp for the $50 target. When the market seems to have some momentum like this, I would be interested in trying to run it out a little bit further. They put the brakes on here a little bit though. Tony's got his eye on this possible late filter entry signal that's building. He says possible late filter entry here in the NASDAQ, and you're absolutely correct. Our filter has gone out of sync. Trend line still holding strong. Of course, if we come back now with a sell signal and that filter flipping back, that will confirm the late filter entry signal. All right, here we are now at the top of the hour. And looking for something resembling maybe a retest here of the low, maybe a short-term pullback. All right, well, things getting slightly more bullish. Hey, way to go, Steve. Steve says, I can't even believe it myself. Those S&R indicators, I think you're referring here to the ultimate support resistance suite here. Changed my trading. Big day today. 2 trades. Well done, Steve. Yeah, it's a great tool for finding, especially if you're looking at profit targets. You're wondering, gee, where will the market go to next? Well, if you break the primary support line, we normally anticipate the market to move 2 zones. So this would be zone 1, this would be zone 2. And likewise, if we break to the upside, oh, well, I don't think we've broken to the upside the last few days. But the same thing would be the case. In fact, I would think if we got above the primary support here, moving 2 zones, zone 1, zone 2, I think we could get held up at the primary resistance. If we break through there, of course, we would move 2 zones as well. That's a long way for the NQ though, given where we're trading right now. fiddling here with another chart. I better start paying a little bit more attention. We've seen first micro macro cross and a soft edge buy slip past me. We've also had a trend change signal there. Sorry, I'm not a multitasker. All right, back into the hard edge now on the Eagle as well as the Raptor. Okay, well, the seller's losing their grip a little. I don't know if I would count them out entirely, but we've got a real struggle going on here this morning. So obviously a decent buying opportunity across the board. Well, sorry, not with the Eagle not producing a buy signal for us. Now we're coming back with a possible hard edge bounce. I don't know, they're both very evenly matched here right now. The sellers, of course, knocking the market down out of the open. Now the bulls trying to put in a decent rally, but no luck so far. Okay, we've got a green bar sell here now on the Eagle, and we do have an opportunity for a second push on this signal. How far can I cover it? Oh, darn, that's a little bit too expensive. All right, well, can I go above this area right through here? That I can do. Let's see what else we've got going on here. We've got a macro pullback. Oops, wrong button. All right, so here we are at 7:10. Come on, just give me a couple of ticks here, and I think I'm going to get a little bit more aggressive with my stop here in a moment, especially if we can get another bar or two in our favor. Come on, just give me one more bar. Pretty please. See, we're about halfway through here. I'm not a Fibonacci levels kind of guy, but see, we're about halfway through this uptrend. So this is where the buyers who got busy buying down here are thinking, oh, this is a good level to buy at. Let's try to buy it up again. That's why we're seeing this conflict between the buyers and the sellers. And this is what's making me a little bit anxious about the trade as well. And I'm even thinking about getting it to break even. Okay, now we'll take it to break even. Come on, get down there. All right, I'm going to jam them up here. Just in case this turns out to be a test of the extreme, again, oh, hooray. So it looks like all I need to do is threaten them with a tight stop and the market will drift down to its profit objective. So that's a very important point to keep in mind. If you want to make the market move quickly, just get a stop in really, really tight, and you'll see that market reverse or head down to its profit target right away. That is tongue-in-cheek, of course. Caught a little bit of a lucky break. You can see that the market reversed up here. I would have got tagged, not necessarily at the profit target, but still we would have put in a decent profit for that. My concern is that this leg down may turn out to be a test of the extreme, retest of the low. But a pretty good start to the day in the Eagle. And once again, we had comparable signals. Your best days are going to be this way, where not necessarily everything is going to be in sync. For instance, we had this first micro-macro cross signal. The eagle was not bearish. However, it was retreating to the hard edge. There was a good chance when this was developing like this, it was looking like, okay, the eagle's going to head back to the hard edge. We're producing a first micro-macro cross signal. It might be worth a go, especially since the parameters are probably close enough that we can cover it below the lows. And then as it turns out, it went up, and then it produced a sell signal. Well, at that same time, we were starting to see the breakdown, or approximately the same time, we were starting to see the breakdown here in the hawk. That kind of confirmed what we were seeing here on the eagle. And then, of course, a few minutes later, the hawk comes along with its first micro-macro cross signal to the downside. So your best days are going to be days when the market is more or less in sync. You're not getting too many conflicting signals across your tools. And it's always nice to be choosy, or to be able to be choosy and hold out for some of those better opportunities. All right, so they're back now at the lows. You can tell from the width of some of these bars, there's a lot of trading going on here. So it looks like a pretty influential area of support. Sellers are pushing back a little bit harder now. Wow. Okay. A little bit more follow through there than I thought we might see, but that's okay. All right. Well, we normally see a little bit of a reaction off of these types of areas. We'll see whether or not that remains true or whether the NQ is going to slip lower here. They seem to be taking their time, however. Tony's asking, Eric, can you show me how to make the stop preview marks brighter? So what Tony's referring to here on the Trade Manager, you have your preview button, and they produce this orange hash mark. Let me show you how you can change that. So you go here to your strategies window. Anything to do with Trade Manager is a strategy. So you're going to go to your strategies. Before you can make any changes, however, you have to disable it. So make sure you turn it off. That allows you to make all kinds of adjustments here. you're going to go to this section here, potential stop indicator parameters. Now you can actually change the style. If the hash mark is too difficult for you to see, you can change it, well, really to anything you want. You can make it dots, you can make it squares or triangles, crosses. But if you just want to make the hash mark darker, this is the value you want to change right here, opacity. And of course you can alter the color as well. Find something that's a little brighter. 255 is the maximum opacity. So you can dial this value up to 255, and that will give you a solid orange line, not a faded one. When everything is to your liking, do yourself a favor and save it. Just type in a name for it. I happen to have, I call mine Hawk, but call it whatever you will. Type a name for it, press enter, and then that will save that for you. And then when everything is to your liking, go here to your Enable tab to turn everything back on. Then you'll have your Trade Manager, and you should have your new and or darker preview markers. The lack of follow-through here is a little bit of a concern. We've seen, just going back here to the Eagle this morning, we saw a substantial decline out of the open. Good recovery, but now the market is failing again. They've broken lower, but no follow-through. Getting the feeling the buyers are going to try to give this another rally. We're now into some yellow bars here on the Hawk. So we've got some yellow bars cropping up. Francisco, good question. Francisco asked, would it be better to set your trade manager to a stop or a stop limit? Now, you've got different order types here. Most times we use the stop order by default. For those of you who don't know the difference, here's just a real quick review. Stop orders, you make the market trade through a stop order in order to fill it. So I will not be in this market unless the market trades through 47.69 quarter. So long as it stays above there, I will not sell. If I almost hit the wrong button. If I have a limit order, you expect the market to fill and then react. So a limit order is a little bit more predictive in nature. So if we see support come in here and I expect the market to come up and bounce off of the support line and head lower, then I can put in a limit order to try to sell it from up there. Now note, the market did not trade high enough to actually engage the limit order, so it also was never filled. A stop limit is kind of a combination of the two, really. The stop limit. Oh, and before I demonstrate it, the limit portion is set right here. So currently the stop limit has a limit of 1 tick. What that means is you're going to allow the market to slip 1 tick, but no more. If it gaps you by 2 ticks, then you're not going to get the order. You're not going to get the fill. So it's going to be a little bit difficult for you to see here, but you can see I've got 2 lines. I've got my entry order, and then I've got my stop limit order. So what this means is that when the market comes down, when it fills this order, if it tries to gap by more than a tick, I will not get the fill. So stop limit orders are useful perhaps in very fast moving markets. For instance, sometimes when we trade the crude inventory report and we bracket the market with our OCO order, I should make a habit of using a stop limit order and maybe setting like a 3 tick stop limit. That means I would accept a $30 slip on my fill, but no more. Now, if the crude oil inventory report is really wild, it's not uncommon to see a 10 tick slip. That's $100. Of course, if the market is really wild, you won't get a fill either. The NASDAQ is normally benign enough that a 1 tick slip is usually the worst I'm going to get. So there's not much difference between using a stop limit or a stop order. It's usually something that you'll use when the markets are a little bit more volatile or thinner. If you're trading a thin market, if you're trading, say, something like oats or perhaps one of the penny stocks, and especially if you're trading a literal penny stock. I'm not talking about the stocks that are even trading at $3 or $4 or $5, but the ones that are trading literally for a penny. A stop limit order might be a good idea there because you could experience some insane slippage. Well, that green bar sell had a whole lot more follow through to it than I thought it would. But it is a high probability signal. Jim says, nice sell on that Eagle trade. Well, the green bar sell is one of our high probability signals. Now, the green bar sell is a continuation signal. That means you have to have at least something resembling a trend beforehand. You'll notice all these green bar sells were preceded by a trend. Now, this one here that actually initiated the trend, that was probably more of a rule of 3 than a green bar sell, but at any rate, it did have some good follow through to it. But once you have a bit of a trend underway, a green bar sell is normally a high probability signal, especially if it allows you enough room for a test of the extreme, so that even if the market does pause a little and go sideways, you can still hang on and see the market fall off. Now, occasionally I get people writing me and saying, hey, Eric, I took that green bar sell signal, and how come it didn't get down to my profit target? Well, I guess it did, but let's say it didn't get down there. What was wrong? Well, what was wrong is you were trading at the end of the session. You know, our high probability signals are going to have the highest probability during the session itself. If you're trying to trade, well, pre-market is usually okay, but if you're trying to trade the last 15, 20 minutes of a session, all bets are off. So, just use a little bit of common sense. And the NQ in a serious tailspin here today. We're quickly coming up on our next support level here. Technically, it's printing 47.59 quarter, but again, it's predictive, right? We're forecasting what the line should be for today. We're predicting the future. So if it only gets to 47.60, that's probably close enough. That is sometimes the one downside with the Eagle is because the brick sizes are a little bit larger, it tends to be a little bit more expensive to trade. Uh, Very often, unless you're prepared to risk a greater percentage of your trading capital, very often you're only going to be able to do a single contract. And of course, managing a single contract is always a challenge. I'm okay going all in, all out, even though the market, went a good $100, $150 further without me. I'm okay with that. We're getting a little pause in the action again. I would think a retrace back to the hard edge, not out of the question. Here on the Eagle, our trade forecaster telling us that we're currently in scalp mode for about another 40 minutes, after which we're going to move into swing mode. So that macro pullback did have some follow through. I was wondering whether or not we were going to see that kind of follow through given that the trend line here had already shifted. You're never going to catch every trade either. You shouldn't beat yourself up too much if you miss a signal. Things happen. Sellers are busy. They're just not going to give the buyers a chance to get on board here. Everybody who missed this initial move is going to be looking for any kind of rally to try to sell. I don't know if they're going to get it though. We've been in a decline since the open, so that's over an hour now. In fact, I would suspect that they'll buy anything that closes even remotely higher. Or pardon me, short anything that closes even remotely higher. I'm surprised that on the Raptor we haven't seen a double pullback signal. It's always just been a single pullback, and then the trend starts going again. It's a sign of a very strong trend. All right, well, they've slipped a little lower, and it looks as though we might be getting that pullback. Now, I think everybody's going to be looking looking for a better place to short from. So as prices get back, say, to the 47.80 area, I think you could see some very serious selling going on. That's where the market kind of got some legs on the second push down. Kind of got a little traction. That ended up sending the market lower. Wow. This is wild. I saw this macro pullback. And yes, I know it's a high probability signal, but it's also our third macro pullback within a trend. Normally we only see two or sometimes three of these before the trend starts to unwind and go the other way. So I wasn't really that excited about shorting it. But it does look as though it would have found our profit objective. And this is always the way, just when you think it can't go any lower, it will go lower. Tony says prices haven't been this low on the NQ since mid-November. So lowest prices in the last couple of weeks anyway. You know, you could short even at this level. You could just sell right here because the market is very, very strong. But like I said, the problem is not so much the direction. The problem is, where am I going to cover this trade? And again, the ideal stop, well, at the very least above 4,800, which I can't do. Yeah, you know what, Stephen? I was actually thinking the same thing. Stephen says, I'll let you know when I short because at that moment the market will rally. I was thinking the same thing actually because here too we have a late filter entry signal, and I got tagged the other day on a late filter entry signal that failed. I ran a deep stop. The market brought me in, reversed, and then rallied up to my stop loss order. Yeah, there are days like that when you feel you should fade your own signals. But honestly, the most difficult part sometimes with the DTS system is just trusting the tool. Trusting the high probability signal. And you can see they all worked this morning. The late filter entry signal, even though you think prices cannot possibly go lower, that's actually a good sign. If you think prices can't go lower, guess what? They're going to go lower. And I'm not saying that to be a wise guy or to be facetious, but a good trading friend of mine always used to say, the big money is on the surprise side. So if it looks to you like prices should go lower, that's exactly when they're going to go higher. This is probably why trading is so difficult, because it never does what it looks like it should do. That's why you need to learn to trust your tools. This is why, in my experience, I know a couple people who are scuba divers. They're very good traders. I know a fellow who's a pilot. He's a very good trader. Because a scuba diver doesn't question his instrumentation. If his watch says he's at so many feet deep and he needs so much time to get back to the surface, he trusts his watch. He doesn't say to himself, oh, the watch is wrong. I can stay down here another 10 minutes. Because then he'll run out of air or he'll come up too fast and he'll get bent. Pilots don't question their instrumentation. If they say they're flying at such and such an altitude, they believe they are flying at such and such an altitude. They don't say, oh, my altimeter is wrong. I'm really, 100 feet higher. And then they come in for a landing and plow the plane into the tarmac. Traders, however, we are a breed all our own. We look at the signal and we don't trust the instrumentation. We say, no, that can't possibly go lower. But it's a late filter entry signal. No, it can't possibly go lower. Boom, down she goes. It's not easy. And now everybody in the trading world is looking at this and saying, this market has got to reverse. It's got to give us a pullback. And the first semi-bullish looking bar, the buyers are going to go crazy. And you know what? There could be a little bit of a pullback because sellers are going to be lightening the load. Those that are trading multiple positions are going to be taking some profit. There's some serious profit on the table. And then the market will continue lower still. This is what in trading parlance is called a parabolic move, where the market just, if you were looking at, say, a time chart or a tick chart, it doesn't display the same on the mean Renkos. The mean Renkos are a little bit smoother. But if you were looking at a time chart or a tick chart, your bars would go something like this. And then all of a sudden, they just start to, they start to go like this. So whereas we had a smoother progression to start, now all of a sudden it's like the bottom falls out and the bars just start accelerating. That's what traders refer to as a parabolic move. If you ever hear that term, that's what they're talking about. Somebody's running around saying the sky is falling. All right, boys and girls, I think we're going to button up the room here, though. Your best bet today is to wait for a pullback. If you've waited this long, That's very likely the move of the day that we experienced this morning. It's extremely unlikely that we will see a significant rally today. If the buyers muster any kind of activity at all, it is likely that we will throw the market into a sideways transition. But we've been in a downtrend for the last hour and a half. I bet you we'll see 2 hours of bearishness. There's going to be some profit taking after the morning session, and it looks like it may be starting already. We've got a yellow bar cropping up here. I would not get too aggressive on the buy. It's not to say it isn't worth trying to buy the market up. We're getting a soft edge buy signal here on the Raptor, but I think you're going to be better off treating it as a scalp type trade. Just go in, get your profit, get out, unfortunately you're going to have to run your stops below the swing low. And if you can scalp in and out, make $50 or $100, be happy with that. Even if the market does rally all the way back here, say to 47.70, I think we had a resistance line around 47.80. Yeah, so your first stop is going to be 47.60, then 47.80. Even if it manages to get all the way up there, don't beat yourself up if you eject and get out at a $50 or $100 tag. That's very respectable when you're buying into such a strong downtrending market. All right, boys and girls, we're going to do it all over again tomorrow. I will see you then. We'll talk to you soon. Bye for now.